Hey everyone, welcome back to Corporate Decoder. Today, Bayview Acquisition Corp BA.Y.A just filed a Form 8K, and it tells us they are buying more time to complete their business combination. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is about a simple but important move, extending their deadline. It is a common practice for SPACs, but let's dive into what it means for investors. Alright, so what we're looking at here is a current report filed on the 17th of April 2026. This is a standard document companies use to announce major events that shareholders should know about right away. The company involved is Bayview Acquisition Corp, which you might know by its ticker symbols BAYA for ordinary shares, BAYA for units, and BAYA for rights. They are incorporated in the Cayman Islands and operate in the financial sector, specifically as a special purpose acquisition company or SPAC. The big news from this filing is an extension payment. On the 17th of April 2026, Bayview Acquisition Corp put $50,000 into their trust account. Now, why would they do that? This deposit is essentially buying them more time to find and merge with another company. Their deadline was the 19th of April 2026, and now it is extended by 1 month to May 1926. Think of it like paying a fee to get more time on a project. This is not uncommon for SPACs. They often use these extension payments to give themselves more runway to close a deal, especially if negotiations are taking longer than expected. This extension is the fifth of up to 6 permitted extensions, meaning they are really using up their options. Let's look at what securities they have registered. They have units, each consisting of 1 ordinary share and 1 right, trading under the symbol BAYA on the NASDAQ. They also have ordinary shares par value $0.0001 per S-share, trading as BAYA, also on the NASDAQ. And finally, they have rights where each right entitles the holder to 1/10 of 1 ordinary share, trading as BAYAR on the NASDAQ. This filing doesn't contain detailed financial tables like a quarterly report, but the action itself is significant. It signals that the SPAC is still active and working towards a merger, but also that they haven't finalized a deal yet. Bayview Acquisition Corp has elected to be an emerging growth company. This means they are subject to fewer regulatory requirements and reporting obligations compared to larger, more established companies. This is pretty standard for newer companies or SPACs. The report is signed by Xin Wang, who is the Chief Executive Officer and a director of the company. This confirms the official action taken by the company's leadership. So, what does this all mean for investors? On one hand, the extension payment shows a commitment to finding a deal and avoiding dissolution. The company is willing to spend money to buy time. However, it also highlights that they haven't found a suitable merger partner within the original timeframe. For SPACs, time is a critical factor. Each extension eats into their available lifespan and can sometimes signal difficulties in closing a transaction. Investors often view repeated extensions with caution. The fact that they are on their 5th extension might suggest the search for a business combination is proving challenging. We've seen similar situations with other SPACs where extending the deadline was a necessary step, but it didn't always lead to a successful merger. For example, some SPACs that extended multiple times eventually failed to find a deal and had to liquidate, returning the trust funds to shareholders. Historically, about half of microcap SPACs that go through multiple extensions often face hurdles in their merger efforts. The other context we have is that Bayview Acquisition Corp BAYA announced an entry into a merger back in June 2024. This filing suggests that the original merger plans might not have materialized or are in the process of being reworked, necessitating the extension. In terms of institutional holders, we see a mix of firms. While their percentage ownership is listed as 0.0%, the noted holders like Periscope Capital Inc., Highbridge Capital Management LLC, and others are actively involved in the markets. Their presence suggests there is still interest in the company's potential, but the low percentage might indicate passive holdings or specialized strategies. Ultimately, this 8K filing is a procedural step. The real focus for investors will be on what company Bayview Acquisition Corp eventually merges with, and the terms of that deal. The extension is a holding pattern, not a sign of progress, but it keeps the possibility of a merger alive. The risk here is that if they cannot find a suitable target or get the merger approved, the SPAC could eventually liquidate. What I am actually looking for is definite news on a confirmed merger partner and the details of that transaction. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.